So when a company like Howmet Aerospace drops its earnings report, the market really sits up and pays attention. But what they just announced for their full year 2025 performance, well, it wasn't just good. It was an absolute blockbuster. We're going to break down exactly what happened and, more importantly, why. And boom, the second that news hit the street, this is what happened. The stock shot up nearly 6%. I mean, that is a huge vote of confidence from investors, and it happened in the blink of an eye. All right, so what was in that report that got everybody so fired up? Let's dive in and decode the numbers and the strategy behind Howmet's incredible year. Okay, so let's be super clear here. 2025 wasn't just a good year for Howmet. It was a record-breaking, absolutely knockout year. They didn't just meet analyst expectations, they completely shattered them. Just take a look at this. The folks on Wall Street, they were thinking, okay, maybe $2.12 billion in revenue. But Howmet came in and delivered $2.17 billion. And the earnings per share, the EPS, even better. They were expected to hit 97 cents, but they blew past that to hit $1.05. I mean, in Wall Street lingo, that's not just a beat. That's a solid knockout punch on both the top and bottom lines.
And get this wasn't just some flash in the pan, a lucky quarter, no. For the entire year, their adjusted earnings per share grew by a massive 40%. You know, in an industry like aerospace, where everything is so capital-intensive, that kind of profit growth, that is absolutely exceptional.
I mean, you don't even have to take my word for it. The company's own report says it all. Records in revenue, earnings, and this thing called adjusted EBITDA and its margin. Now, if you're not familiar, EBITDA is basically a way to look at a company's core operational health. It's like the profit before you start subtracting all the tricky accounting stuff. Hitting a record there, that means the fundamental business is just humming along, stronger than it's ever been.
Okay, so a record-breaking year is great, but why? Where did all this incredible performance come from? Well, the answer is right in their sweet spot, their core market.
This chart just lays it all out, plain and simple. You've got commercial aerospace and defense aerospace. Together, that's a massive 70% of their revenue. So let's be real, Howmet is an aerospace company through and through. The takeaway is simple. If planes are being built, if planes are flying, Howmet is winning. Big time.
And it's not like one is carrying the other. Nope. Both of their main aerospace markets are on fire. Commercial revenue, up a really healthy 12% for the year. But the defense side, whoa, it surged an incredible 21%. That's the 1-2 punch that really fueled this whole record-setting year.
You know, it's so important to remember we're not just talking about numbers on a page here. These figures represent real, physical, mission-critical parts. We're talking about these incredibly complex engine components, advanced fasteners, the stuff that absolutely has to work on a modern aircraft. So every single percentage point of growth you see, that means more of Howmet's amazing engineering is up there, flying in the skies right over our heads.
All right, but let's dig a little deeper. Peel back another layer of the onion here, because even inside a really successful company, there's usually one part of the business that's the real star of the show. For Howmet, that is without a doubt their engine products segment.
Yep, this is the one, the absolute powerhouse of the company. And what it did in the fourth quarter was nothing short of spectacular.
Just look at that. In just the last 3 months of the year, revenue for this single segment jumped 20% compared to the year before. That is some serious acceleration.
And here's the kicker. That growth is insanely profitable. The profit margin for this segment, using that EBITDA measure we talked about, hit 34%. Think about that. For every single dollar that came in the door, 34 cents was core profit. Wow, that is just an incredibly efficient machine. Okay, so we've established that Howmet is making a ton of money. But, you know, what a company does with its cash is just as important as how it makes it. So let's take a look at their financial game plan.
All right, first, a super quick explainer. We're going to talk about free cash flow, or FCF. The easiest way to think about this is like a company's take-home pay. After you pay all the bills to keep the lights on and maintain the equipment, this is the pile of cash that's left over. It's the money they can use to do whatever they want, pay down debt, buy back stock, you name it.
And in 2025, how much did Howmet generate? A whopping $1.43 billion. Having that much cash just gives you so much flexibility and financial muscle. So what did they do with all that cash? They had a really simple, smart 3-step playbook. Step 1, generate all that cash. We just saw that. Step 2, use it to make the company stronger by paying down $265 million in debt. That's always a good move. And Step 3, reward the people who own the company, the investors. They spent $700 million buying back their own stock and paid out another $181 million in dividends. It's just a really disciplined, shareholder-friendly strategy.
Okay, so that was a whirlwind tour of an amazing 2025. But you know how it is, investors are always asking, what have you done for me lately? They're focused on what's coming next. So what is Howmet telling us to expect for 2026?
Well, this table lays out their official guidance, and the story's pretty simple. They're expecting more growth, a lot more. They're telling us to expect revenue to jump up to $9.1 billion, earnings per share to climb all the way to $4.45, and for that free cash flow number to get even bigger, targeting a massive $1.6 billion. So, if we boil that all down, what are we looking at? They're basically forecasting double-digit growth everywhere that matters. About 10% more revenue, a really impressive 18% jump in earnings, and another 12% growth in free cash flow. It's pretty clear they think the momentum they built in 2025 is just going to keep on rolling. So here's the bottom line, the crucial point to take away from all of this. Howmet is just firing on all cylinders. They rode a booming aerospace market led by that absolute beast of an engine segment to have a record-breaking 2025. And now they're using all the cash from that success to make the company safer, reward their investors, and get ready for what looks like another year of really strong growth.
And all of this leaves us with one big question for the future, right? Howmet is flying incredibly high in this aerospace boom. They're playing their hand perfectly. But as they climb even higher, everyone's going to be watching to see if they can navigate any unexpected economic turbulence that might pop up and, stay on this amazing course.